Do you know why your bank hates it when you use cash? Today, I'm exposing why banks love it when you swipe your credit card and really dislike it when you use cash for your purchases. So let's pull back the curtain a little bit and follow the money. Hi, I'm Chizaba. Welcome to Zoba's World Lab, your guide to real world finance and a space where creating wealth fearlessly is encouraged. All right. So the reason your bank hates it when you use cash for your purchases is because they make no money when you use cash. This is because every time you use your credit card, there are different ways they make money from credit card purchases. For every single swipe of a credit card, they charge a fee. They call it an interchange fee to the merchants, and they get those fee from the merchants, and that's how they make money. So for every single swipe, if you swipe your card 20 times a day, each of those 20 times they are making money from what wherever you have gone to swipe your card. Now multiply that by the millions of people who use credit cards, and that's a lot of money they are making when people use credit cards. But when you use cash, they cannot charge a fee, or they are not charging a fee. And so they are not making money from cash purchases. Another way they make money from credit card usage is interest. For the smallest of balances, whether it's $5 up to the highest, millions and millions of dollars, as long as there is a balance, they make money from the interest that has accumulated on that balance. This is why you can swipe your card for a $500 purchase, and if you do not make the payment on time for that item, you could easily end up paying $1,500. So now the item literally costs you 1,500. What the merchant gets is 500. The bank is making a profit of $1,000 just off of interest alone, accumulated interest over time. This is why they encourage the use of credit cards. Forget that it means people can fall into debt. They don't care. They're making money from the interest. It's the same thing with mortgages, why you have a $250,000 mortgage, but by the time you are done paying interest, you've paid almost twice as much in interest to the bank or financing institution. So they make money from that interest, and that is why they encourage the use of credit cards. Another way they make money from credit card usage is they sell the data and information from your credit card transactions. So every time you use the card, they are building a data profile on you, your purchase habits, and your location and stores you shop at, and so on and so forth. And that is the valuable information to companies, grocery stores, clothing shops, corporations. All of that data and information helps them when it comes to marketing and creating goods and so on and so forth. So the banks collect that information from your credit card transactions, and they sell the data to these companies. And that's another way they make money. So think about it this way. If you go into a store and you swipe a credit card, the bank makes on that one singular purchase. The bank makes money from the fee they charge the merchants. The bank makes money from the interest they charge you. And the bank makes money on the data they sell to corporations and companies. So, from every single transaction, there are three ways the bank makes money. Let me rephrase that. For every single credit card transaction, every single credit card swipe, the bank makes money three different ways: from the fees, from the interest, and from the money they get from the data they sell. Also, cash costs them money. They have to transport it, so that means they have to have armored trucks and so on, security guards. They have to insure it. So when you hear of FDIC, federally insured, kind of like you pay insurance on a car or your house. They have to insure the money, and then they have to count it. And so that means they need to hire people and hire machines, and they have to store it. So whether it's a warehouse, a vault, a safe, whatever it is, somewhere safe and secure, and the security systems that go along with all of that. And so cash costs them money. However, credit card purchases makes them a lot of money. And so that is the different ways they make money. So the question, every single time you get a credit card offer in the mail or they send an email, and I've been seeing a lot of that from credit card companies where they will say, well, we notice you haven't used a balance and so and so. Because you haven't used it, we've added an additional $2,500 on your limit. Whenever you get emails like that and offers, the question you should lead with is, who is really benefiting from your opening a new credit card? You need to think about that. And so the question becomes, well, what do you do? I mean, we live in a society where credit has to be used. It is just set up that way. So if we are trying to make credit work for us, what do you do? Well, stay tuned for the next video.